Hello, dear students. Welcome to the Adrian Academy. In today's session, we'll see about how Bitcoin crashed and what is cryptocurrency, why it exists, and how Bitcoin crashed. So, let's begin with cryptocurrency. So, cryptocurrency is digital money that exists only online and isn't issued or controlled by a single government or bank. Instead, transactions are recorded on a shared public ledger called as a blockchain. So think of it like a shared notebook. For example, imagine everyone in a community keeps a copy of the same notebook. When Alice sends one coin to Bob, a new entry is added to the notebook. Everyone updates their copy so no one can secretly change the record later. Because many people hold copies, there is no single master copy controlled by one bank. So, can say crypto is a digital money whose ownership and transfers are tracked on a blockchain instead of the in a bank's private database. So let's move on to what makes crypto different from the money in your bank. Okay, bank keeps the official records, but crypto black blockchain keeps the official records. Bank's money, bank can reverse or freeze some transaction under rules and laws, but in a crypto, transaction are usually difficult to reverse once confirmed. In bank, which is issued by a central authority, government or either central bank. Here in crypto, it is typically issued by software rules and network participants. In bank, transfers often go through bank's payment network. Here can be sent peer to peer over the internet. So it is not fully controlled by a single bank, does not mean unregulated or safe. Governments may regulate exchanges, taxes, and financial activities around crypto, and users can still lose money. So, we'll see what are the common examples. Bitcoin, the first and best known cryptocurrency. Then we have something called as Ethereum, supports programmable applications as well as a currency. Then we have the stable coins. So cryptocurrencies designed to track a currency such as a US dollar. So, a simple example, suppose think you want to send rupees 500 worth of Bitcoin to a friend. Okay, you just need to open a crypto wallet app, enter your friend's wallet address and the amount. The network verifies that you own the coins and haven't already spent them. The transactions is added to the blockchain. Your friend's wallet now shows the received coins. No bank clerk approves it, remember, but the network's rules and participants validate it. So this is how the common bitcoins. There is also biggest misconception about the crypto is they call it as anonymous cash. In reality, most blockchains are public. Transactions are visible to anyone. Wallet addresses are pseudonymous, but activity can sometimes be linked to real people through exchanges, records, or investigation. So, in one sentence, if you wanted to describe crypto, it is a cryptocurrency. Basically, it is an internet based money where the transaction history is maintained by a distributed network which is called as blockchain rather than by one bank or government ledger. So this is next we'll see Bitcoin crash of 2022. This is very important topic. Imagine a town where everyone is excited about buying plots of land because prices keep going up. People borrow money, tell their friends to buy, and believe prices will rise forever. Then suddenly, what happens? Interest rate increases, people have less money to invest, some big companies in the town go bankrupt, and fear spreads. So everyone starts selling at the same time, and prices will crash. So this is what essentially what happened in a Bitcoin in 2022, but we'll see in detail. So, in November 2021, Bitcoin reached an all time high of about $69,000. By the end of 2022, it had fallen to around $16,000, losing more than 75% of its value. So, we'll see why did it crash one by one. First one is raising interest rates. So what happened is during the COVID-19, central banks printed money and kept interest rates very, very low. People had extra money and invested in a risky assets like crypto. When inflation increased, central banks raised interest rates. As a result, loans became expensive, saving accounts became more attractive, investor pulled money out of crypto. In simple example, if a bank offers only 1% interest, people may invest in Bitcoin. But if the same bank offers 7%, many prefer the safer option. The second one, we have fear and panic selling. When Bitcoin started falling, some investor got scared. They sold their coins. The selling pushed prices down further. More people panicked and sold. This is also called as hard behavior, like a fire alarm in a crowded mall. Even if there is no fire, okay, people start running because everyone else is running. Third one is collapse of Terra and Luna, very important topic. A major cryptocurrency project which is called as Terra and its token Luna, okay, collapsed in May 2022. Investor lost billions of dollars. People started questioning whether other crypto projects were safe. So think of it as a famous bank suddenly shutting down. Even customers of others bank become nervous. So fourth one, we have bankruptcy of crypto companies. So several crypto firms failed, including Celsius Network and Voyager Digital. These companies had invested heavily in risky crypto assets. When prices fell, they couldn't repay customers. Confidence in the crypto market dropped sharply. Last one here we have FTX collapse. In November 2022, the major crypto exchange called FTX collapsed. FTX meaning future exchange. Many people believed it was one of the safest crypto platform. When it failed, billions of dollars disappeared. Investors lost trust. Bitcoin prices fell even further. Like you can imagine, discovering that one of the current country's largest bank had no money left in its wallets, people would panic immediately. So this is what happened in 2021 Bitcoin crash. So next we'll move on to what is the psychological reason behind the crash. Okay, so the 2022 Bitcoin crash is perfect example for behavior finance. So the first one is FOMO, that is also called as fear of missing out. I already have created one detailed video on FOMO. I have linked on my description. Please go and watch that. So what happened is when Bitcoin was raising, think that your friends are making money from Bitcoin and you think that you should also buy too. So many people invested without understanding what is crypto and Bitcoin. And overconfidence, investor believed Bitcoin can only go up. They ignored risk and warning signs. And next we have hard behavior. People copied what others were doing. During the boom, everyone bought. During the crash, everyone sold. Loss aversion. Many investors watched their portfolios fall but refused to sell because they didn't want to accept a loss. They hoped prices would recover quickly. So we'll see what can we learn from this. Prices do not rise forever. Never invest based only on social media hype. Diversify instead of putting all money into one asset. Understand what you are buying. Fear and greed often drive markets more than logic. So we can see the Bitcoin crash of 2022 happened because rising interest rates reduced investment in risky assets, major crypto companies failed, investor confidence collapsed, and fear driven selling created a chain reaction that pushed Bitcoin from about $69,000 to around $16,000. Thank you so much, and please like and subscribe my video. And also, if you want any more topic, please comment.